Good morning, guys. Welcome to this Wednesday, May 21st. And again, a little bit of weakness in the overnight. Oil popping right from the get-go on reports that Israelis was going to nuke the Iranian, or was going to bomb Iranian nukes. So that spiked oil right from the get-go. I don't know where that report came from, but the spiked oil market, and they're still holding on a little bit to the upside. And then we got some other stuff going on, just adding some pressure to the downside. So the overall they're backing off a bit on the ES. Uh, I think we may have found a spot cut off the buying finally up here at the 59.90s. Definitely a pretty good pullback here in the overnight. So yesterday we started off had we actually popped a little bit to the upside, and then we got a little bit of weakness. Let's see here. Yeah, this is the overnight which popped. That's why it's showing that. I just confused myself a little bit. So the overnight going into yesterday's trading was the one which extended to the upside. Then the overnight, the day session could not really extend. They were holding below. They were holding below Monday's trading, and then we had a kind of an okay close, I would say. But they, man, this rundown here at the end, towards the end of the day, was really something. And then that complete V return, that absolutely was made it really difficult to trade that thing. Unless you're on the right side of it, you didn't have a standard chance one way or the other. Anyway, so it's interesting, a little bit of weakness going on to get the day started. Before I dig further into that, the news. And so we had mortgage apps come out this morning. They were to the downside. Rates are up. Mortgage applications way down, killing the housing market. We get the Atlanta Fed business inflation expectations at 10. Oil report at 10:30. We have a 20-year auction at 1. So I heard something about weakness going into that auction. I don't know how strong that opinion is. You just can check the headlines on various websites, financial websites, and you get an idea of what they think is driving the market going into the morning. Right now, I think the one part will probably be the that Israeli report, how if there's any truth to it, if there's a leaker going on, it's some leak of some information. You never know really, but it's if it's out there, then yeah, this popped oil a little bit. The oil has since backed off a bit, so. We'll see how that kind of shakes out. But at this point, I would assume that we have cut off the buying at the buying, and I would probably give it to the if I scroll this guy down just a little bit in the F2 here, so you can see. So this is Monday's trading way up here. That was on the Moody's downgrade. It totally reversed it. A little bit extension up here to the upside going into tomorrow's trade or yesterday's trading. So that's kind of, I would say that that's probably where we cut off the buying. So 59.90s. And since then, we hold yesterday was below the no expectation, no extensions in the day session. And I usually kind of lean against that, but a little bit more than the overnight because the overnight always have a little bit of volatility to it. But if the day session is not extending, I would probably count that as a cutoff of the buying. And right now we're looking for a spot to cut off the selling and see if we can find a lower edge of this distribution. Chances are we have that four letter ledge at 58.90. We have a three-letter ledge at 58.65. So one of these two, I think, is going to be the one. So we may see some further weakness in today's session, running it down here. And this is just normal market profile development or market development, I should say. Market profile just makes a pretty good case of capturing it. So we're looking at we had a move out of the middle to the upside. We finally cut off the buying at 59.90. We're backing off from there. We are down here at the 59.20, 25s right now. We've been all the way down to 5900s. And then we'll see where they stop. But I mean, at this point, we have ledges to lean against at 58.90 and down here at the 58.65. They take out the 58.65s, I think we have got a bigger problem going on at that point. But at this point, it seems very much like a normal pullback from the highs, and it's time to find a spot where they're going to cut off the selling, and then we're going to be in stage 3, building value. So I'm going to start off looking for a weakness, see if they can take this lower. If this starts trading above that London high at the 35, so I'm going to take off the short bias and go back flat out range bound. So that's the level I'm keying in on this morning. So 59.35, above that, take off the short bias, go back range bound. As long as they stay below it, I would look for short setups against the 925s, the 935s here, okay, 25s or 35s for rotations back down again. And if they push the lows here, I would just stay on the short side, at least to get started this morning, see how far I want to push this. So 58.90 is down here, that's a low of that overnight. 58.65 is going to be a little bit lower than that, obviously. So we'll see how far they can take it on the downside, but that's kind of what it feels like. We are heading down into looking for a spot to cut off the selling. And here's your 58.65. That's the low of that overnight distribution. And if they don't really start pushing lower, I mean, we're most likely going to find ourselves in a range bound session. If for some reason the we see a little pullback and we have a nice rally like we had the other day and they start extending again, well, I'm gonna have to eat my words on that one. But at this point, that's kind of what it looks like, what the structure looks like, and then we'll trade it as such. So 59.35, take off the short bias at that point. Still looking for short setups against the 50s, the 60s, 70s up to the 75s here for rotations back down again. And above 75s, I would just lean in on the long side. At that point, I think we are definitely on our way higher. So that's the ES to get started. Looking at the Nasdaq and the bonds, and here's one of the issues. The bond market is not having a good day. They are, as you can tell, way right back down again. So the Moody downgrade, I guess, had the bond market a little bit spooked. And I'm not sure why, but it's because that downgrade seemed very political. And it's like the fact that they do it now, it's like, yeah, we had 4 years of complete reckless spending, and now they're gonna downgrade you. Yeah, it feels a little bit weird. But the modern market is reacting. If it's on this one or something else, we had a nice little retracement the other day. This is a period. The first reaction on Monday, Tuesday, we retraced pretty good. Looks like we had a pretty good move to the upside. Now in the overnight, we are pretty much giving that back up again, and we are down here testing that lower edge at 1120. They take out the 1120s and the 1116s. I think we are going to be down here testing 110.20 in no time. So we could very much be finding ourselves in new new territory on the bond side. And the lower the price goes, the higher the yields come up, and that's just going to be a big wet blanket for the equity market. So this could also be part where we're seeing that weakness in the overnight on the stock market. So I would trade it from the short side at this point. If they trade up above that 112 or 5 or 6, the London high, I'm taking off the short bias, going back range bound, and above this level, the 112 20s, I want to be back range bound. So sorry, I'm going to be back on the long side if that happens. So looking to sell strength against the 11 28 29s, 12 or 5 or 6, rotations back down. Last one would be at the 12 and the 20s, and but then already range bound at that point. So taking off the short bias above 5 or 6 there. And looking for long setups against the 1120s and 1116, 15, 16 here, these support there. It's pretty good support. But if it comes out, well, we can head all the way back down to the 110 levels. And here we find ourselves in price discovery almost to the downside. And that would not be a good sign. That would be yields going that high would be a bad sign, would not be good. So that's the bond straight up on the short side of the market on the Nasdaq. Also pulling back. They found a spot to cut off the buying there as well. They're up here against this upper attractor area and in this general big area of volume. Right now they've been all the way down to this little attractor at the 200s. And watch that level. So we have the this little attractor area, the three-letter ledge is at 180, 190, and then a two-letter ledge at 120, 115 to 120. So both of those come out, and we start retracing these single prints. Well, yeah, we're better off. Stay on the short side at that point. But as you saw yesterday, there was like a grinding motion to the upside, and then they saw when they leaned into it how quickly they knocked down that market, and it's ugly. I mean, that's just freaking when those algos kick in and everything piles on, you can just see how that whole thing absolutely comes apart on the downside. So it goes quickly on the downside, and if you can get in on one of those before it really starts going, then you'll be in good shape. But it's trying to trade it as it's moving. It's just way too volatile, back and forth. It's impossible to get in, and even if you're right, you get in, you get as shaky, flat out shaken out of it. Anyway, so looking to sell strength at this point against the 340s and well, I should say the 340s, maybe up to the 370s for rotations back down. They're trading right above the 290s now. That was what going to be a level for before, but they traded back up above it. So those two levels above the 370s, I'm going to take off the short bias, going back range bound, and still looking for shorts against the 430s, 470s up to the 500s for rotations back down. If they trade above the 500, 510s, start trading above that, I'm going to be back on the long side again. But at this point, it's the same as the ES, looking for a spot to cut off the selling. Let's see how far they can take it. If they take out that lower edge that they won, this 120 edge, uh, at that point, bets are off. We are heading lower. Then they start retracing those single prints. And uh, and then just we'll see. Sometimes they run it lower and just scare the bejesus out of you. But it's at this point, I would if they start taking that out and probe and stay below it, I would just stay on the short side and see how far I can take it. But I'm still looking for buying opportunities against the 290s, the 230s, 190s down to the 121, 120s for rotation, or 150, 120s for rotations back up. So one of these could hold for support, and that could cut off the selling in this stage two type development. So that's where we are on the NASDAQ. So both ES and NASDAQ in stage two, retracing, looking for a spot to cut off the selling. And it doesn't need to be a sell-off by any means. It's just the weakness, finding that lower edge. But if that weakness turns into selling, then they'll take out that lower edge and we are heading lower at that point. So we'll see. At this point, I don't see the outlook. It looks a lot better than, I mean, a lot of people are finding reasons not to buy, this like they're climbing that wall of worries. And they're sitting on the sidelines, finding all sorts of reasons why they should stay out of the market, why it can crash, why it can do all those sorts of things. And that's just the par for the course. That's what they do. It's all these people which have bets that the market is going to go down are getting squeezed. Gold, gold, up, heading back up again. That market freaking moves, doesn't it? As I said yesterday, we were up here against this upper edge. Yes, they took out that 3260 edge yesterday. There was no shot. It started trading higher. And the next attractor, they took out the low volume area too. So now the next level of attraction is 3340. So 3340 is where they're heading. And I would just stay on the long side and see how far they can go. Now, as I said yesterday, they were trading up here, so we're looking to trade the overnight from the long side of the market. And you can see here, you had a weakness at 93 down to the 87s. 87s held, and then we are back up again. Now, I did redraw this morning, so the only thing you had to lean against yesterday was this four-letter edge, the little breakout point when they start taking this higher. So a little bit of weakness in the overnight, and then they took off to the upside. I've been holding on the gain still since. So stay on the long side on gold. Let's see how far they can take it. If they retrace down here, I would be looking at buying against support against the 33.8s, 33.04s, 32 or 3300s, 32.92s down to the 32.87s. I would say below that 32.92, that's when you start thinking about the short side confirmation below 87. But at this point, staying looking to buy a weakness. If you get a nice pullback, looking for a spot to get long here, and if they are pretty good on the pretty good momentum to the downside, they could be a potential short trade. It's just kind of tight on the support area, so you have to be a bit cautious about it. And then finally oil, and here you have oil. As you can see, that popped pretty good in the overnight on that oil, and that Israeli attacking the Iranian nuke report. And now they backed out all the way down here to that starting point, 62.30. It's a little bit to the upside now, but I think that still lingers, that if those talks doesn't work out, and there'll be an attack on the Iranians, and that's going to settle it. Now, I'm not sure. I mean, it's they've been going on with that for a long time. These negotiations. I don't think that's going to go anywhere. And it's the only thing going for that right now is that there's just a pretty clear It's not much of a negotiation actually. You either give up all your enrichments or you're going to bomb you. So it's up to them, but they're going to try to negotiate and drag it out and do all that stuff. We'll see how much patience there is. At this point, though, definitely, if it is an attack, probably you're going to see higher prices on oil in the short term, at least. So they oil up on that. We'll see if they start taking out that 63, 60, 64 levels. Both of them come out, and well, then we really have something going in repricing oil. But this is just up against these upper edges right now on oil. So we are up against these upper edges. Now, if they start taking those out and heading up here back to the 66s, maybe the 69s, well, that would be a function of uh, something happening in a bit more kinetic in that region. But we'll see. If there's enough supply online and enough promise on supply, and the people are not going to worry about the Iranian oil coming off the market quickly, then I don't think that reaction is going to be very long lasting either. So there you have it. All right, so that's oil and gold. So trade oil from the long side to get started. If the trade below that 62.30s, I would take off the long bias. So looking to buy against the 62.60s, 62.30s. That's it. And below that one, take off the long bias and go back range bound. And on gold, trading from the long side of the market. Let's see how far it can take it. We're going to buy a weakness on that one. All right, back to the ES. And yeah, pretty much where we left it. So let's see how this whole thing shakes out. So not a whole lot of news to drive the market. We live a little bit more news tomorrow. The whole week is going to be light on news, so as you know. All right, guys, we'll leave it there for now, and I'll see you back at 11:30 for the next update later.